right, hello there. Yes, we are live once again on Sunday. All right, welcome back to Jeremy and myself. We are back on the weekend segment, and welcome to all participants for Stop Nitpicking. All right, Stop Nitpicking with IMP over here.
Hi, welcome
All right,
everybody.
we'll just give a couple more minutes for more people to join us on. Hopefully, it's not a lazy Sunday afternoon. Hi, Isaac. We're back. You asked for it last week. We made time,
Yes.
Isaac.
Hi Sonny, hi Isaac, hi Jonathan, hi Jason.
All right, awesome.
Awesome. Right, we have a Facebook user here. You need to enable StreamYard to view your profile. Otherwise, when you ask questions, we won't be able to see who you are and we won't be able to address you personally as much as we like to. Terence, you know what? I actually have a joke to tell.
Oh, go ahead.
All right. So, you see, the thing is that it's actually since the last two, actually we're looking at since about 25th, 24th, 25th November. I've been so excited about the trade idea that I've just been like reading into it, like doing more research and things like that, so that I've been breeding stocks all the way since then. And whenever I'm on any like dating apps, I'm like talking to the ladies and all that, they are just asking me what am I doing. I'm just talking about stocks and all. And I think they kind of get that I'm actually like a stock scammer out there, which is very common nowadays. So that they kind of like starting to unmatch me. So it's very funny. Yeah.
Okay.
All right. But I hope this is all worth it, because this is really a truly exciting concept that we put it together. And I must say,
I think today will be an interesting segment.
Yeah.
I think today is pretty interesting. All right, now, so let me set the session up. I think we can get things going. As promised, we try not to start things too late, so we keep on time and on schedule. So welcome once again, everyone, to Stock Nitpicking with IMP live with Jeremy and myself. Okay, we had a 2 weeks break because our schedules really clashed with one another. All right, so we couldn't make a possible time slot to fit in. Right, but you asked for it, all right, and we made time this weekend. Right, and we have actually something very interesting to share. I think Jeremy came up with something and he proposed it to me, all right, and I'm for the idea, okay, and I think many of you would like the idea as well, all right. So today is pretty much his show, all right. Today is pretty much his show. Now, but before we get things going, all right, could we get all of you who are joining us live right now to actually help us click the share button, all right, help us share this video out. All right, because Jeremy really has something exciting and interesting to share with all of you. All right, he's actually taking the commitment to build a portfolio and to track a portfolio that he's about to build. All right, so all of you will be able to see it, you'll be able to track it, all right, and you'll be able to also, if I'm not too wrong about it, make money from it.
Yes,
all right,
yes.
of course, all disclaimers applies. All disclaimer applies, but he's going to actually make the opportunity available for all of you. So, you know, if you like the idea of investing into the stock market from a fundamental perspective, all right, then you got to keep a lookout for today's session. Yeah. All right. Now, so once again, help us click the share buttons and click your like buttons as well. And we are about and ready to get the session started. Okay, now, so today is Jeremy's show. He has something very fundamental based and pretty exciting to share with all of you. All right, so today I'm taking a back seat. I'm pretty much the moderator. I'm the moderator.
All right, you enjoy the time then. I think it's very seldom that Terence gets to be the moderator here.
I'm going to get the fun of it today.
All right, so I just want to make sure that everybody is still awake here. So this is a very heavy topic today. So if you really need your coffee, you know, please go and have your coffee right now.
I have mine. I finished mine.
Right. So, but this is a very, I think this is a next step when it comes to fundamental analysis, that we need to have this acumen and we need to have this foresight and this like an instinct. I'll call it an instinct for. And it does take time to build up. And I think that this is something that really truly excites me. And I do hope that I did more of this in my lifetime. But I think this might be the trade of a lifetime from me myself. Okay, so I shan't hold everybody up, and I'm just gonna go straight into it. Terence, all right?
Yes, today is Jeremy's show, so everyone get ready and welcome Jeremy over here. All right, thank you, Jeremy. Over to you.
Okay, all right. So disclaimers first. Okay, sharing today is not financial advice. You need to do your own due diligence and sort of advice of a financial planner if you're unaware, if you're not sure of the information provided before doing any trades on the companies that we will be mentioning today. And the presenter, which is myself, I already have positions in the companies mentioned, and I intend to hold them in the long term for the foreseeable future. Okay. All right, so I'm going to go into it straight. So here's the post that started everything together in terms of our sharing with the community. So what is it that on 25th of November at about 7 a.m. got me so excited? In fact, I think if I remember correctly, I was actually pinging Terence about 24th November in the middle of the night. And I was telling him that, hey, this is a very strong idea. This is a good idea that I have. I just piece it together, and I really need to bounce the idea off him because I needed some views from my trading mentor in terms of like, hey, whether this is something that I like. Was I delusional and that kind of thing. You could see that I am already feeling the excitement here. So here's the thing, and I immediately got started. You see, the thing is that when I could feel and could smell the trade opportunities, that I immediately got started with opening a trade account here with eToro and also with Tiger Brokers, because these opportunities are really there. And the thing is that with the type of brokers and platforms I had back then, I had Trading Works, I have Trading Costume, I also have IBKR, Interactive Brokers. These three didn't allow me the access to what I really needed and what I really wanted. So I quickly created accounts for me to be able to take opportunity of the trades here. Okay, so what is it that I was so excited about? You see, today is actually the 17th episode of Stock Nit-Picking with IMP, including our previous sessions. And it so happens that the opportunities we're talking about today, right, they comprises of 6 different factors. And solid fundamentals is only one part, one cornerstone of the whole thing. And there are actually 5 other factors that actually allow us to be able to look into the trade and say that we could really look at it. At least from my angle, I think that the trade is really viable. All right. So what is it? You will see. Now, this is a chart of the SPY, as the Exchange Traded Funds. You could see that in terms of these 2 candles here, this is the 13th of November and the 16th of November. There is a gap up here, and the market kind of moved up. All right. How much did it move up by? They actually moved up by about 1.25%, kind of like overnight here. So can I just ask, like for our viewers out there, do you still remember what happened overnight in terms of like on 16 November? Do you remember what happened then? Maybe if you hear an answer, you can just shout it out here. All right. So I just want to keep it engaging so that you can run through the trade thought process, that what got me thinking here, because it's not often that I actually get to have a whole flow of piecing the information together from the different pieces out there and then slowly coming to a entire trade idea together. So it'd be good if you can do just some engagement here so that you could follow my train of thought here. So what actually happened on the 16th of November, if for some of you who do remember what happened then? Any takers? Terence, do you still remember what happened then?
I think this week was all set up about the vaccine, right?
Yes. 16 November was the vaccine. So what happened then was on the 16th November, Moderna announced that their stage 3, their phase 3 vaccine efficacy has a 94.5% vaccine efficacy. So then the thing is that immediately set forth the market reaction to the positive fight for the fact that maybe there's a cure coming out for COVID-19. All right. So immediately we could see that, hey, this is something that could move the market. It's the vaccine efficacy results. But then as we take some time for the news to settle down, then the question begets is, we are now in the era of the Second Cold War. And the Second Cold War is actually between China and US and the Western powers in a certain sense here. So China being the world's second global economy, and we know for a fact that because of the Asians here, for them, China faces everything here. why is it that China has been so quiet for the longest time? That was what was setting me thinking since the 20 something November. So what I was thinking of is, why is China so quiet? I didn't have answer then. I only have answer, I think it was on the 23rd of November here. So what happened was I came across a video on the China version of the TikTok. It was by a Chinese statistician. And this Chinese statistician was saying that because of how vaccines are tested, there needs to be a certain critical volume of people who are infected and undergoing the test, the testing structure, in order for the vaccines to be able to prove their efficacy results. And so happens that for US, the companies that have announced the results earlier, they don't have a problem with getting people infected because the transmission rate has been very high in US here. But for China, because they managed to get the transmission rate under control very early, they had no choice, but they had to outsource their testing to Brazil. All right. So when they outsource it to Brazil, they have to wait for Brazil to get the results for them. And as I was piecing this information together, I didn't have any much news in terms of that. I had to rely on a Chinese statistician, one who was willing to come on social media to post his views, which is a very rare thing because for a professional viewing Eric's view on social media in China, it is something that takes a lot more courage than usual because of China's control in the social media. So when I was bouncing off the trick idea with my inner circle and with Terence back then, I didn't have any news. And that is when this news came upon. Let me see. This is the vaccine trading, vaccine development cycle here. And you see that in order for a vaccine to be developed, right, we have to have this part whereby they need to know whether the vaccine triggers an immune response and whether it does protect against the disease. So right now we actually have this two phase whereby we need to know whether the vaccines protect against the vaccine, protects against the disease here. And all the companies are actually rushing to get this phase through before they can move into the mass production. In fact, some of them are actually rushing already into the mass production here. Now, the news that came up was actually on the 24th when the Reuters announced that Brazil already announced that they have enough infection data to analyze the Sinovac COVID-19 vaccine. Right. In fact, on the day itself when they announced this, right, there was a rally in terms of the Asia as well as the global market. All right. So that was when I confirmed that, hey, what I had from the Chinese statistician is not just hearsay. This is really something true. Because what he said in the video was saying that, okay, based on his analysis, he's thinking that they will likely release, they being Sinovac, will release the result at the end of November or at the start of December. Okay. Now, what else is said here is that they have gathered enough infection data and they now will likely release the efficiency result in the first week of December. So we are on the timeline here. We're on timeline here. All right. And if you could recall when I was posting the post, I was thinking between Thursday and as well on Sunday. But this was when it confirmed that, hey, we still have some time for us to quickly move our resources around and provide a very good sharing. So we don't want to put it too slip short. So we put it together and we set it for this Sunday so that our viewers have time to move to do something about the news sharing if they like to. All right, here. Now, this is taken from Straits Times yesterday morning. All right, so if you could look at it here, okay, between the different companies, you see that the Chinese companies took a totally different approach in terms of developing the vaccines. Right, they use the inactivated virus style, whereas the Western countries, they focus on the viral factor as well as the RNA factor. Just take a bit of focus on that. We'll go into that later. All right, but you do notice that in terms of efficacy, we're looking at between 62% to 95% for what has already been announced. All right, and also you will see that the price per dose is actually much higher in terms of that for Sinopharm, and for Sinovac as well, something in the middle range. Okay. But essentially what it means is that, hey, what I'm saying in terms of the inactivated virus here versus the viral factor and RNA factor, which will be part of our discussion later, is not just hearsay. This is actually from verified news sources. Okay? Now you'll be thinking, what has the type of vaccines got to do with our trade? We are talking about stock market. Why do I need to know about vaccine types? Okay, this is when some of these like reading you do will have a bit of an advantage for yourself. So if you could see, under The Verge, I managed to find an article from The Verge that summarizes the types of vaccine and their pros and cons here. Under the gene-based vaccines we have here, they did explain that for gene-based vaccines, which is the RNA, which is part of what Moderna as well as the Pfizer did for their vaccine, they are fast and easy to make, but it is an unproven concept in a certain sense. And there are no approved vaccines for humans that uses this method thus far. Okay, now this is the part I need you to take away here, because what happened is that for, to my understanding, for COVID-19, the companies that they choose to use RNA is because of the time factor. They need it fast. They just wanted it fast. And so balancing all the factors here, they chose that approach. Okay, now moving forward, we see that there is another one, which is viral factor, which is what they call the adeno factor here. Now, in a nutshell, it's good for provoking an immune response, but it's still experimental. You do notice a trend whereby for the Western countries that are focusing on experimental style of vaccines, and for the approved vaccines, again, there are no approved vaccines for human use that uses the viral factor style. All right, here. So what is the whole point here? Now I go to the contrast here. For the inactivated virus, which is what that is focused by the China company, they are proven, but they are hard to manufacture. Meaning, based on the timeline there, it typically takes 10 years for a vaccine to be created. Typically 10 years. But you see, it has already been approved for polio, influenza. In fact, to my understanding, all of the different vaccine shots that we have been taking since we are young, in fact, for Singaporeans here, they are all under the inactivated virus style of vaccines. So this is a style of vaccines that we have been used to, and we know that they works because they just create a very weakened form of vaccine, and they move it into your body. They allow your body to fight the virus, and then to build the immune response here needed to fight against the virus moving forward. Now, what has it got to do with this here? You see, the thing is that China has already been vaccinating their frontliners, their doctors and the border workers since July. Now, we need to backtrack here. Today is November. They haven't got their efficacy result out. But we moved back to July. They have already been vaccinating their frontliners, their doctors and the border workers. Now, there were, back then when this news came out, right, the only thing that I was observing is that a lot of international observers were saying that this is a very reckless move. Why are you doing this to your people? Why are you doing this? Because you're simply putting their lives at risk. Okay. Now the thing is that since I've started trading in 2016, I have been very open that I don't really read news per se. I don't really read too much into the details of the news. I may read at the headlines. I look for the objective facts in the news. I screen away. I filter away all the subjective contents, the opinions. I take it out because I just find that a lot of headlines, a lot of information, they are sensationalization. They are just opinions of the reporters here. And it annoys me. Okay? So the part on people finding that China has been reckless, right? That kind of annoys me because I just find that it is part of a bias here. This is my view here. This is my view here. Now I just need you to take a step back and ask yourself the question. All right? Now this is one. Since July 22nd, this is the interview. They have been using the Sinopharm vaccine on their doctors. I just need you to ask yourself the question, how long does it take to train a doctor? Now, if you take 10 years to train a doctor, which is close to a generation time, and you're going to risk your whole generation of doctors' lifespan on a vaccine that you believe that doesn't work, is this something that a country will really do? Is this something that a country that really will do anything to make sure that their economy survives and their people will survive will really do? Is this really a reckless move? Or is it something that they have already thought out properly and make sure that they know what they're doing before they do? All right? So I leave it to discretion here. To me, it's very clear here because if a doctor takes 10 years to 15 years, 14 years to train, and you are willing to use the vaccine on your doctors, it goes to show the amount of confidence you have in vaccine. And if in terms of efficacy results, right, you just need that kind of results to prove your point, then it's just a matter of going through the whole process to finish and get the results here. Okay, now that's the first bubble which we have for the vaccine style. And the next step, which is we deploy on the major economy here. Now you need to take note that China is the first major economy to recover. This is taken from the Guardian side. It is the first major economy to recover from the COVID-19 pandemic. So we know for a fact that this whole year, all major economies are shrinking and they're not doing well because simply put, they are not having enough consumptions in terms of their domestic consumptions to be able to sustain the entire economy. And China being the first country to actually experience the whole pandemic and then taking on a very forceful approach to handle it and keep it under control allows them to be able to take on the first mover advantages of recovery. In fact, as I'm talking to my China counterparts now, be in terms of my business dealings and things like that, when I'm in discussion, they can't relate to why am I still having to wear a mask when I walk around, and why do I have to look for a different place, not in the public, if I need to go for drinks after 10:30? Because for them, it just doesn't make sense. Because like, why do you need to have crowd control after 10:30? For the viewers who are not in Singapore, after 10:30, we don't have any. We do have this law whereby we do not allow public drinking. All right, there's no open carry in Singapore after 10:30. All right, so in this sense here, China will have an advantage in terms of the next 5 years, maybe 3 to 5 years, when it comes to the recovery here, as the other economies are still struggling to pick up after the COVID-19 pandemic. Okay, next one. China has this thing which is the 5-year plan. Okay, every 5 years, their leadership will come together and discuss something called like the next 5 years, what is their focus, and what should they be doing, what was the issues with the last 5 years, and things like that. So in the 14th 5-year plan, in the Chinese context, they call it 145 meeting, 145. Okay, so they have already concluded that, and they have been very upfront that they will focus on domestic market and domestic demands, with a focus on bridging up the middle class upwards. So they want to avoid the middle class trap whereby the middle income group and the higher income group, that disparity grows too much. Okay. Now, the thing is that when in doing so, right, China has been very clear that they will focus on improving and enhancing their domestic markets demand, and they will also enhance on the infrastructure because they have also committed to develop the western parts of China to improve upon the poverty situation, which is more prevalent in the western part of China, where it's further away from the coastal region. Now, this is a thing you need to take note of, because when it comes to such macroeconomic directions, if you can catch wind and you can be sensitive enough to know such directions, it will help a lot in terms of your investment focus here. Okay, now here, the last one, which is RCEP. RCEP here is signed into deal on the 15th November. This is sometime when the news was announced in the vaccine period, and this was a big thing because this is actually the biggest trading bloc. For those of you who don't know, RCEP is a 15-member countries trading bloc that collectively they account for 30%, up to 30% of the global GDP, meaning it's even bigger than EU, European Union. Okay, so this kind of like a free trade agreement will actually allow China and all the other trade partners in this RCEP free trade region, right, to actually benefit from each other in terms of the negotiation that they had. Right, this is actually to benefit of each other in terms of like their competitive advantage here. For those of you who are from economics background here, now all of these factors, these 6 factors, when you put together, right, they just give us a lot of context in terms of the moving forward, what you need to do. We have the timing here, which is before the vaccine efficacy results are announced, and we know the direction, we know the focus, right? So to recap, Chinese companies are likely going to announce their vaccine efficacy result at the first week of December. And they use inactivated virus for the vaccine, while their Western counterparts uses RNA and viral vector. And the RNA and the viral vector does not have any existing approved vaccines for human use. Third one, China has already been using the vaccines on their frontline workers since July 2020. This is 2020, okay? And China is the first major economy to recover from the COVID-19 pandemic. And their 14th five-year plan focused on their domestic market. And they have entered into the RCEP, the biggest trading bloc in history, accounting for 30% of the global GDP. Now, knowing all this, what are the opportunities we have identified? Okay, this we put it together. So we have 1, 2, 3, 4, 5, 6. 6 different factors for us to build into a trade idea we have. And this is not a single week, 1 month, 1 year trading idea. This is going to be a 5-year thing. I put it in words here, right? This is going to be a 5-year thing at least for me. Okay. Where lies the opportunity? Now, the thing is that because of the fact that, this is my personal belief, because of the fact that the inactivated virus form of the vaccines, right, is a more proven and established style of the delivery, and the fact that China has been so confident in using it on the frontline workers, I'm of the view that once they announce the result and when they follow through, the global equity market should move, and we will move mountains. Okay, so for me, the global equity market will have opportunities there, first part. Beyond that, China-focused companies that focuses on China demands, will also benefit, and in fact benefit more, because China has already mentioned that they will focus on their domestic demands. China will improve upon their infrastructure, they will improve upon the value-added industries in the country. So that will be one part as well. And because of that, we also want to take a look at infrastructure as well as on consumer defensive. Companies that no matter what kind of economy environment, be it a heyday or be it a bad day, they will be in demand. Their products or their services will be in demand here. So, but then the thing is that when it comes to opportunities, the risk is also clear. There is the global uncertainty in terms of like whether these vaccines that we're looking at can be efficient, or rather can be effective in the long run, right? Because we really don't know. And if it goes well, yes, we're going to see a recovery. And by 2021, because vaccine needs time to be delivered to the population, there needs to be a period for observation. So we can look at 6 months, 1 year, before the global economy can truly take off and recover again. Now then, this is a whole 1 year of uncertainty here. And if anything goes wrong during this 1 year, then we're going to go through another long period, extended period of uncertainty here. That's one. 2, stagflation here. Stagflation refers to stagnant economy plus inflation. You see, the thing is that because US has been going through quantitative easing for so much, and because US is actually the global leader in terms of the major economy here, what they do, no choice. You will see that they have an impact on the global economy, right? So when they have been doing things that they will increase inflation across board for their own country, inflation will no doubt also happen across board in terms of the other economies as well. So if let's say, for example, inflation happens for other countries as well, then the whole baselines for a lot of analysis might shift. Okay, so this is also one reason, because we don't want to make sure, we don't want to have a situation whereby inflation eats into our returns. So we want to make sure that what we choose here does account and does balance out some of the risks that we're taking in terms of like the stagflation factor. The last one, which is what a lot of people in Southeast Asia will be concerned of, is China's reputation. We have heard of news like Chinese companies have very creative accounting practices. We've heard of news like Chinese have exploding sinkholes, things like that. Generally, when it comes to China, anything is bad for some people. Okay, now I can't blame them. Like when I talk to some of them, I'll ask them, have you been to China themselves? They will say, no, I've not been there. For me, China is a very wonderful country because I've been there consistently in the last 2 years plus, every like maybe 2 to 3 months for business visits as well as for personal visits as well. I think it's a very wonderful country. In fact, when I go there and come back to Singapore, I find that in terms of cashless payment, I'm going back to my village here, right? So I think a lot of people will actually put a big discount in terms of like having to invest into a Chinese-based style concept. Fine, I accept that. So there is the risk here. So let's factor that into as well. All right. So what can we do? We can look out for Chinese-focused companies that is listed in Hong Kong and China stock exchanges. We can also look out for global equity companies listed in the US, European, as well as other exchanges. Now, they must have, because we need to balance out the risk here, they must have solid fundamentals, they must have low debt levels, they must have relative low betas, because that will mean that they are less sensitive to market changes. We don't want a company that actually has very high beta, and when the market shifts, this company shifts along the same way, and then when that happens, we just fall off our bed and we can't get to sleep. Right? We want to invest. We don't want to speculate. Right? So we want to invest. And because of all these things, we want to put what we have learned in the last 16 episodes of this stock Nit-Picking with IMP into work. We want to know that they are undervalued. All right? And this is going to be a long-term portfolio-based investment. This is not going to be a trade. This is a long-term portfolio-based investment. Okay? Just to make sure that I have not lost you guys, can you give me a 1 if you understand what you have so far? If you don't, can you drop me your questions until here? All right. I'm just going to take a break and drink some water. Terence, you got anything so far?
Nope, still listening to what you have in store.
All right, our viewers.
I believe you're building up, right?
Yes, I'm building up. Or have I lost you all?
Leave a comment for Jeremy if you're still with us, yeah? All right, Jonathan.
All right. Thanks, Jonathan. Right, thanks, Josephine. And one more, because this is a very heavy topic today.
All right,
thank you, KS. All right, okay, let me go on. Okay, so what did we do? So for me, I've put together my own money, not too much, but I want to show that, yes, this is what I mean, and I mean what I do. I put together a portfolio, and this is a portfolio summary based on Simply Wall Street. Simply Wall Street will recognize the portfolio characteristics and gives you a write-up. It says the portfolio I built together is an undervalued portfolio and an income payer. Okay, and this is as of this morning, and this is the returns I've gotten since 23rd of November when I first put together the portfolio. Basically, it's a positive returns then, and these are the stocks that I've chosen. If you could see in the middle, this is the market average in terms of the volatility. Now, these are the low betas company that I have here, and the overall beta, which is the sensitivity against the market, is 0.992, meaning it mirrors very closely to overall market return and volatility here. But it is, you must understand, these are all companies that are undervalued from my analysis here already. So if market goes down, they will follow down in a certain sense based on theory, but these are already undervalued. But if market goes up, same, these are all undervalued companies that I'm actually using in my portfolio here. And this is based on what some of our viewers would like. This is a free cash flow model, the portfolio intrinsic value. Currently, it is about $2,040, and they view that the intrinsic value is fair to be about $5,200, undervalued about 60%. Okay, so here, this is an introduction I did as a something like a funding for me to play along. This is as of Friday morning. Just gonna play that for the sake of it and like to let you guys have a feel of the portfolio and as an intro rather than just me nagging here. Here on. Okay. Oh, right. So in case if you are interested to have a look at the portfolio in terms of the Simply Wall Street site, you can actually scan the QR code and you can be able to access the portfolio and take a quick look by yourself and just slowly glance through the companies that are inside. All right. So you can actually see the build-up of the stocks, the breakdown, how much percentage, that kind of thing. And over time, as I slowly adjust the portfolio over time when it comes to news that I receive and the decisions I decide in terms of adding more things and maybe shifting and taking profits or cutting losses here, you will be able to see that because I will definitely update the Simply Wall Street site as well. And it will also come together in the eToro site that I'm giving you that. Okay. And with that, it's also there that I'm going to put my portfolio out there in the public here on the eToro side here. Left side is in case you don't have an eToro account, you can actually use this to sign up and is this a referral link here? And if you do that, I'm not too sure whether there's any referral bonus here, but yeah, let's just see. And on the right side, this is actually the QR code for my portfolio. So if you do want to follow in terms of exactly how I'm doing, and you believe in terms of what I'm actually sharing for this, yes, then you can actually utilize the copy trading services for eToro to try it out. I'm not earning anything from this because for copy trading services, there's no earnings for the time being. And there's no fees to you because for copy trading services, as I understand it, the fees are based on the spreads here. The eToro site actually charges from the spreads here. Okay. For those of you who are not familiar with what copy trading is, you can have a watch in terms of this video to quickly explain what does it do. All right. So if let's say, for example, you do believe in the long-term approach to stock portfolio-based investments and you find that what I've shared with you so far, you want to give it a shot, but you're not too sure about how you want to manage the portfolio on your own, you want to give it a shot in terms of the copy trading services with Jeremy, you can give it a try. All right. I'm just putting it out there because I want to build a track record here as well. And that's the first part here. And yeah, there's still the icing on the cake. We're not just going to do it one, and we still have the second one. Now, for those of you who find that you want more control, you want to do your own, okay? Here, this is the company that I have identified here. I'm hiding off, masking on the name of the company first. This is an investment company, holding company, providing oil field services and manufacturing oil field in the PRC, China. There's a stance to Pakistan and Middle East, Canada, Indonesia, and internationally. You see, the thing is that with Simply Wall Street, right, there allows certain level of shortcuts in terms of what you can do. And as I was looking through this company, after going through that first trading concept, which is the portfolio-based investment style, I was thinking through, like, if let's say I truly believe in this concept, is there anything else I can take as a second trade idea from this? I was bouncing this idea with my trading partner, also with Terence, things like that. And I figured that, okay, I can maybe look out for things that has high beta and very good value in terms of a very long-term portfolio. Meaning to say this is a company that I'm building to hold for the long term, very, very long term. Okay, now I managed to find this from my very first attempt, and this is not by a stroke of luck because this is from what I've been building in terms of the knowledge here and from the acumen. Yep, and here, I'm just going to give context here. You see, the company is, as of the last Friday, Hong Kong dollar 99 cents. Okay, and at its heyday on the 20th of January 2014, right, it's actually trading at $5.52. Now, this is the stock price, right, in terms of the maximum time frame that the Simply Wall Street site can account for. And you notice that it's actually been trading at higher ranges previously. All right. I mean, we know that oil prices has not been doing very well in the last few years, that kind of thing. But yes, it has seen its heydays and now it's actually in a sluggish mode. Now, the thing is, valuation check-wise, this is undervalued compared to the factors that they have. And by what I understand, this is actually a free cash flow model. And here, from the free cash flow model, right, they find that the stock has an intrinsic value of about $5.74. Now, this was not what they led me to the trade. Okay, I have mentioned many times in the last 16 episodes that I take the valuation check with a pinch of salt because this is based on their parameters. I look at parameters factually, very factually in terms of the numbers here. I don't look at the subjective part, which is, oh, the intrinsic value is $5 plus, also I think it's undervalued. No, I don't look at it this way. I look at whether this company is trading below its book value, price book value. I look at whether this company is trading at a fair value in terms of its price to earnings, price to sales, things like that, and whether the debt to equity ratio is fair. This is what I look at. But I know that there are our viewers here who would like to refer to this. That is why I'm showing this. Okay, the whole thing that holds together is actually this: the price to earnings growth ratio, PEG. This is what they actually led me to really consider this as the cornerstone for my first overseas portfolio in terms of non-US and non-Singapore portfolio. A PEG of 0.1. In a certain context, it means that for every dollar that you put it in, you are standing a chance to earn a $10 return on future earnings. Again, for every dollar you put in, you're standing a chance to earn $10 in future earnings. This is one way to represent, to interpret the PEG, price to earnings growth ratio. So to me, this is something I really want to build on, and I'm going to build a Hong Kong, US, Singapore based portfolio in time. But this will be the most aggressive company that I'll be going for time being first, until I realize that maybe I need to diversify for this portfolio, the next portfolio I'm building here, using title brokers here. And without further ado, this is the company I'm looking at. This SPT Energy Group 1251 by Hong Kong, and it was trading at 32 cents Hong Kong dollars. Right, Terence, have you heard of this company before?
Actually, no.
Before I share with you, you haven't heard of this before, right?
No, because I tend to always focus only in one market. So, yeah, that's why I think it's pretty interesting that you bring it up, because growth stocks is definitely something that people will be interested in, right? But as I've said many times, there are many different forms of traders who choose to specialize in different areas. Right, and I found my niche, so I choose to focus on my niche, and growth is definitely not one component that I focus on. Right, but I do understand the concept, and the only reason why I'm not focusing on is the amount of time that I need to put in order to kind of be able to find the companies that I want. Yeah, so as a mentor over here, I choose to be very focused rather than spread my time really thinly. But I mean, you have always said to me that this is something that you always have vested interest in. So you have basically showed me by justifying your thought process, like what you share with everyone today, right? It's not something that is baseless, but you go through a lot of thought process behind coming to this company by itself, right? So I've always told the rest of the students in the community, as long as you know what you're doing, right, it's not wrong, right? It's only wrong when you start investing based on hunch. Yeah, then it becomes like you're just investing for the profit potential, but you don't really know what you're doing. But you obviously showed that you know what you're doing. So continue sharing with the others. I think that this is really beneficial for some of our participants over here.
Thanks, Terence. I think that really sets up my day, because I was thinking that in the sense that, am I overdoing this? Because for a senior trader in the community to actually be so loud in terms of like sharing it, this is the stock I'm looking at for the long run, and I'm looking at it for the next 5 years. It takes a lot of confidence out there, and for our viewers out there, for me to be able to do this, it takes a lot. Even though you know that I'm someone who's very loud and very competent when I do, right? I do have my doubts as well. And if you know me long enough, you will have seen the episodes, very small episodes that I do that. So maybe some encouragement will do. Can you give me some encouragement in your comments here? Right. So yes, this is something I'll be looking at for the long run, SPT Energy Group, and I'm going to build into that. And there should be any changes in terms of my views, I will definitely let the committee know, but this is really something I'm going to be doing. And for that, I have actually used the Tiger Brokers platform because frankly, I was thinking, how do I do that with the brokers available to us? And it is really, really painful to really try and trade with interactive brokers or the only, I mean, I was looking at it from a cost efficiency point of view. It was either interactive brokers or it was DBS here in the same sense. I thought like I want to have more control in the long run. So if I'm gonna be building an international portfolio, then interactive brokers or Tiger Brokers. But I just didn't like how I was doing it. So yes, I'm gonna break away from interactive brokers in the long run, but Tiger Brokers is what I'm gonna try out. And yes, I did sign up here. So this is a referral link also from Tiger Broker. So if you want to actually also take on the trade and you're also looking out for a broker and you find that Tiger Brokers is one of those you want to take on, you can also scan the QR code for my referral link and we can see whether there's any referral bonus. I think there is something, but that's not the focus of video sharing. This is just something as additional perks if let's say you like to try it out also. So I'm just going to clarify it very quickly and move on. And yes, I'm going to go into the question here. Okay, questions, opening the floor to our viewers here. Time is yours, viewers.
All right, Jeremy, I think Isaac brought a good point to you. He's also trading the Hong Kong market and he's specifically into e-gaming. So he's always open to looking out for more opportunities as well. All right, now, and I think before Jeremy has to go on, let me perhaps add on the brokerage side of things. Sure. Yes, Tiger has been very aggressive, especially in the Singapore markets. I think it's because they have just set their foot on this year, and I do believe with the scale of how Tiger is marketing themselves, all right, there should be some link backs to interactive brokers. Yeah, okay, because of the way and the market coverage that they are capable of offering in such a short time. And, you and me will all agree, before this year, we probably never heard of a broker called Tiger Broker. Right? But if you look at their credentials, their licenses that they have available, they definitely have some strong backing behind them. So I would believe that, they may have some links or, tie-ups with interactive brokers as their parent company or something like that. I'm not too sure, but I'm just putting it out based on my understanding and perhaps, experience from how brokerage as an industry works. So if you're trading the US market, it is definitely still the TD Ameritrade, Tastyworks, which is the up and coming, and Interactive, which are the bigger ones. But if you want exposure to regional Asia markets, I would believe Interactive is definitely one. Okay, and now the up and coming, which is Tiger Broker. Yeah. All right. Now, so I mean, if you don't have an account and you do need one, I think it's harmless to actually use Jeremy's affiliate link or referral link to actually open one, because it doesn't detriment you, right? And he's actually doing the sharing, so I think it's no harm on this sense as well.
Yep.
Yeah. Okay. But he's definitely not doing this for that referral itself. He's actually out here and he told me sometime back, Terence, I want to build a portfolio, I want to build a track record. To show people that, even on my concept over here of buying stocks, it can be done, right? And it can also be done on a very low capital base as well. And that's where, I told him it's all for it. Yeah, all right, I'll support you and, you can go ahead with it. All right, and he's here, taking the next step out and actually sharing it open up with all of you. All right, now, Jeremy, back to you. I think Isaac has a follow-up question. Okay,
let's see. Isaac, your first question, let me just give you a comment here. You're saying in e-gaming and there's good opportunities to diversify. I personally don't have a view on e-gaming here, but I just think that before you ask me, but if you ask me now, I just think that e-gaming is pretty attention-based, and yes, the money does flow into the industry very fast, but my question would then be, where does it fit in the overall long-term view? That means, where is the 5 years plan? Where is the 5 years plan in terms of e-gaming? Yeah, because if let's say, for example, e-gaming, we do see like maybe last 2 years, 3 years, we see maybe League of Legends. Even before that, we see StarCraft being the go-to game, and then for sometimes before that, we see mobile games and things like that. They just keep changing. The flavors just keep changing. How do you keep track? How do you keep track of the trends? Because they're very fast. And I actually personally know a game developing company owner in Singapore. He's a personal friend since I was like 15. We are of the same age. He tells me that doing game development takes a lot of money. You're looking at 7 to 8 figures range to burn before you can have a title that is probably for profit making. So yes, I think I have no doubt that it's a very big industry that you can make money off. But my question is, if you are going to invest in long term, then how do you make sure that you're always at the top of the game, that you always know what's going to be the next trend? I can't do that at the moment. Now I can't see a trend properly in terms of the e-gaming industry. That is why I don't. I choose to focus on what I think and I believe I can find value in the space that I choose to. With that, I just want to bring in one point on my conversation with my gym trainer yesterday morning. See, the thing is that he's been asking me like, what do you choose? What do you do when you choose a stock? I say, I don't choose a stock. I decide on the stock I don't like. I don't decide on the stock I like. Again, I don't decide on the stock I like. I decide on the stock I don't like for sure. He was like, what? Oh, then he got it. So you see, the thing is that I know why I don't like. I know maybe high debt to equity. I know like very high price to book, high price to sale, high price to earnings, things like that. Yes, I eliminate them all. And it so happens that I'm very lucky that I found Simply Wall Street as a screener for me to be able to do that easily. And from that, I was able to screen easily. And then I look at individual stocks. Okay, this number makes sense. This number I like. The niche is something I like. Oh, this niche is not something I like. For example, when I was doing the screening for the portfolios, all the coal companies I avoided because I just find that they are not in trend with the policies in China. So yes, I think gaming is one. Yes, and I believe, Isaac, you have your views as well, but I really don't know the long-term trend for gaming. And as for broker, your question is on FSM1 as a choice of broker. I don't have a view on that because I don't know of that broker. Terence, do you know of that broker?
No, man, but I would believe it's probably more of a regional-based broker. So once again, I think if we are based in Singapore, or I'm not sure if Malaysians will be allowed to open an account with Tiger, but Tiger has definitely stamped their feet on the ground this year to establish themselves as that one-stop broker for regional markets. I think that's where they position themselves. Yes, they do offer US market, but definitely they're not going to be able to fight with the big guns. And we do have these big guns who make their account opening process very readily available. So that's why you don't really have to look at Tiger Broker. But if you are trying to get exposure to regional markets like what Jeremy is doing right now, Hong Kong and China, I think Tiger makes an excellent challenge when it comes to commissions and fees. I think that's what Jeremy has feedback to me.
Yep.
And I think I just want to add on to what Isaac or what Jeremy is probably trying to explain to Isaac. Isaac, I think e-gaming will be a pure growth industry. That means you're investing based on growth. Whereas I think what Jeremy is trying to build in terms of his style over here, it's a combination of value plus growth. That means he wants growth, but he also wants to start off with companies that provide value in the first place. So that's where, he mentions that, where is it going to be in the 5 years? He needs to know that the long-term plan is there. And then right now, the stock itself is very, in perhaps what we call an undervalued position, but there is growth potential priced into it. So I think it's just a difference in angle, difference in style again. All right. And that's where, we have so many diverging traders. And sometimes you need to know what resonates with you. Because if you pick a style, but it doesn't resonate with you, then you're going to find that it's an uphill challenge. Yeah, because it is not you. all right, and it's just not gonna fit your lifestyle, your habits. So you're always gonna fight. Okay, fight not in a sense of like brutal fight, but fight in a sense of challenge for time. Because in our lifestyle over here, one thing that we lack is definitely time. So it will be a presence of time doing something that you don't really enjoy versus you could spend the time doing something you better enjoy. Yeah, so for Jeremy, he enjoys more in terms of researching on value growth stocks. So if you ask him to go into e-gaming and put all the time to identify a good e-gaming company, then he may find it a cumbersome process instead. Yeah, okay, so it's about finding something that resonates with you. Yeah, or if it doesn't resonate with you, then it must be simple enough so that it doesn't take away your time and allows you to make what you want to make. All right, Jeremy, back to you.
Okay. Isaac, your question, does Tiger Brokers trade ETFs? You have any particular symbol in mind? I'm just going to run and fire on my platform to see whether they have it there just for you. Shall we?
Yeah, well, just perhaps type in a couple of ETFs.
Yeah, just type in a couple. I'm just going to do it on my phone to see whether it's available there. Right. Meantime, does our other viewers have any questions, or have I fully convinced you all that you all don't have any questions? Was I really that convincing?
Nice, Jason. So now we know Tiger is very aggressive in Malaysia too. So our discussion on them trying to stamp their foot on regional markets, it's valid. So they're probably trying to position themselves as the IBKR for Asia. Maybe that's where their backers are actually Interactive. But Interactive has been slow to penetrate the Southeast Asia markets, so they may be partnering one of the local players and then renaming it as Tiger. Perhaps that's what's happening. Yeah, all right. Peter, it's the weekend. All right, Peter, it's the weekend. Yes, so we understand. And if you have sent us an email, right, not to worry. By Monday, all right, by Monday, our team should be getting back to you. All right, it's the weekend. I give my team time off on the weekends. If they do answer you, I'm glad because I have a very hardworking right? But if they don't, please understand that I will understand why they have not replied you. Okay, all right now. So it's the weekend. So not to worry. They will be getting back to you. Yeah. All right.
Right, Josephine. It is actually very simple. It's through DBS fast transfer, and I think I got my funds reflected within the hour in my broker. Yep. Yes, the SPT Energy Group is not in the Kaizen Star portfolio because eToro, they only allow the more well-known stocks to be tradable on their platform. And it also happens that SPT Energy Group seems to be very, very much under the radar. And I was not able to put it in. Trust me, if I could put it in, I would definitely put it in. And I told my inner circle I would have it such as 20% to 50% of my portfolio. But I can't, so I have to build it separately. And yes.
Yeah, this is where every platform will have their own limitations. Right, so they may allow some stocks, they may not allow some stocks to be traded. So I think Jeremy probably couldn't find it. That's why he didn't add it into the portfolio.
Yes, for eToro, there is some stocks that I can't put it in because they don't offer that company as well. And for Jonathan's question, Jonathan, is my new portfolio purely for stock holding only? For the eToro, it is only gonna be for stocks. Yes. And I might move some into REITs or into ETFs because if I find that there's value in that space here, that is the consideration at the time being. For the Tiger Brokers, I am actually considering to move my options portfolio over there as well so that I will have a true international portfolio in terms of options being cash generating and then using the funds from the options cash generation to buy into the stocks and having it in a full round cycle there. Yeah, that's my whole game plan in the long run there. Yeah. Okay, so let me go back to Isaac's question. Hong Kong. Okay, let's try VOO. Meanwhile, if you have any other questions, you can raise it up. Otherwise, we will be calling the session very soon.
This is your opportunity to tap his mind, everyone. All right, now. So, if you have heard what he shared, but you're still not very sure, just send him a comment. All right, ask him out.
Meanwhile, if you like what I shared so far, then please also let me know, because I don't know the type of contents you guys enjoy, and it's always been one-sided, and I really don't know.
Yes,
Yeah,
definitely.
yeah.
Right.
For Isaac,
Ladies and gentlemen, please remember, when we do these segments on the weekend, we are also constantly trying to crack our brains to figure out what we can bring to every one of you. And I gave Jeremy this segment because if you look at the US market right now, I think it is common sense logic to just put it out there that it is a market right now that's heading into overvaluation. Right. So trying to find gems in the market is not impossible. But I think even if you spot any gems right now, it comes with a decent set of risk. All right. Now, so this is where when Jeremy came in with something like the Hong Kong markets, I actually think that it's pretty potential in that sense. So that's where I'm actually kind of giving Jeremy the free flow over here. All right. The free flow. Yeah, okay. And those of you who are in our community and our latest membership site launch, I'm trying to tie Jeremy down to a 1 hour live trading segment every week. So I'm squeezing his hands right here. Yeah, okay. I'm making it public to squeeze it even harder. Right now. But once he gives me that 1 hour of the week, all right, all of you will be able to see how he trades live during a live market segment on a week-to-week basis. All right, right now I'm the one doing it 1 hour a week. All right, and when I can't do it, Jeremy will stand in. But I'm trying to get Jeremy to do his dedicated 1 hour every week over here. Right now, so that's what we're trying to do and add on to our membership portal. All right, Jonathan has a question. Doesn't know what to ask yet, but he's asking if you can flash your eToro QR code again.
Sure. Let me.
Jonathan, I think what I'll get Jeremy to do is perhaps, Jeremy, after the session, maybe you could leave a comment and then, just attach your eToro and Tiger Brokers QR code into the comment segment.
Sure, I'll do that.
Yeah, I think that will be able to help Jonathan as well.
Yeah. Okay. For Isaac, the counters that you give me I seem to be able to see them all in the platform, the Tiger trading platform here. So yes, the 9091 is a Nico AMG game U, right? Yeah. So I think they have it as well.
All right, great, Jeremy. Isaac enjoys the session today. Very, very good. Thank you, Isaac, for letting Jeremy know.
Awesome. So yes, I've really been reading the whole portfolio and the whole trade idea recently. It's the whole week. It's a crazy week. Yeah. So
right. Right
I'm
now, sorry. Let me just address Peter's question. Peter, yes, it does run out, but I believe the deadline is on Monday, 2359. Monday 2359. Yeah, okay, because Monday is the 30th. All right, so it's scheduled for the end of the month. All right, so I think there will still be time. Let me try to get to one of my team members. If they can, they'll probably get you a reply. But if they don't, do expect one from them earlier in the day tomorrow. Yeah. All right. So I hope you understand that it is the weekend after all. But thank you very much. Thank you very much for letting us know. Yeah. All right. SO Liam has a question for you, Jeremy.
So I think, to be fair, I'm not sure where you're gonna find your account from. But to my knowledge, I was not charged any fee so far in terms of finding the account. And I don't know whether, let's say, for example, you're finding an account from overseas, whether there'll be a fee there from your bank or from Tiger's end. So it might be more fair to you to actually go through Tiger's in terms of like the questions itself. But as far as I can see, in terms of finding the account, I don't see a fee for finding the account. Yeah. Isaac, you're really, really interested. Give me a second. Let me check for you. 1 second.
Welcome, Peter. No problem. Jeremy, you just did free marketing for Tiger Brokers today.
Well, I mean, if it's something good for our community, I don't mind. Because, let's see. Isaac, Vanguard FT, right? Vanguard FTSE all world units. Yes, we have it. VWRD. Yes, it's there. Okay, so yes, I'm just gonna lightly touch on the coffee session that didn't happen yesterday, just to maybe to share that, because what happened is that 3 weeks ago we had this coffee session with our committee members, and the question back then was mainly into my journey as I slowly stepped into IMP, and how did I manage the aspects of my finances and my risk management before I moved into trading full time for a whole period of 1 year before I really got bored and went back into corporate world. And I must tell you that to be able to trade full time, it is not just knowing how to trade. It is not just knowing how to manage your trades. It is a lot more than that. It's got to do with your own. Do you know your own opportunity cost? Do you know your own risk management and things like that? Your mindset and all. So yes, that was the things that we touched on. It's not just trades there. And Jonathan, you're saying it's another portfolio that I mentioned. What do you mean? Can you elaborate, please? There are two brokers that there are two platforms, the two portfolios I shared. The one is actually my Tigers brokers platform portfolio, which has more access to more range of different companies. That portfolio only has the SPT Energy Group for time being, because that is a fresh account that I just started just to trade into SPT Energy Group for time being now, and I'm going to build that for the long run. For the eToro portfolio, I couldn't put in SPT Energy Group because I couldn't find it in the platform itself, and that is why I actually opened the Tigers Broker platform, and I realized that I could do options on the Tigers platform as well. So I'm just going to slowly move my portfolio towards Tigers in a way. I hope that explains your question there. All right. Terence, you want to do anything to you want to have anything to add to that?
No, not really, because I have my own segments on Friday nights with all our members as well as fans over here from our Facebook group. So I think today is really for me to complement you and your kind of stock selections. And since today, it's Hong Kong market, so I can't do anything with options. So like I said, I'm the moderator today.
Okay.
I'm the moderator.
All right. So if that is the case, I was saying for the sharing session here. So unfortunately, we didn't have one here because I thought really it was crazy with the shopping crowd yesterday. You didn't see Vivo City, it was crazy, and I think everyone went crazy with the shopping there, even myself. So yes, I am not gonna.
Crazy everywhere. I think it's crazy everywhere. I was just on the roads earlier today, and there was a pile up on the exit to Plaza Singapura. So I think everybody's out for shopping today. And
even today.
Yes, all the way to Cyber Monday, I think.
Oh.
Yeah. So guys, Singapore is back to normal.
I hope
less the mask and the group dining, but I think we are back out in 70-80% force into the shopping malls. I think
all that's left is the drinking crowd, and then we really will be back to full force in terms of the retailing sector as much as we can.
Don't. That's not gonna happen anytime too soon. I won't be. I won't be too keen on trying to get a swab just before I go for a drinking session.
Oh.
Oh my goodness. I think that's an industry that's really gonna have it tough.
Yep.
Yeah. Right. Can you imagine, like, you're gonna do a club on the weekend? Thank God it's I'm past that phase. But if you're gonna go to a club on the weekends and then you got to plan and schedule for a COVID test before that, oh my goodness.
Oh. All right then. So anyway, I was saying that because it seems that we don't really have much of a turnout for the sessions like yesterday as well. So I'm gonna sunset that session, the coffee session, and really gonna have that moving forward. So yes, it's off moving forward. So do not be alarmed like how come Jeremy's not doing that anymore, because I did repurpose my Saturdays intentionally for that, but it so happens that we didn't have any much people interested. So yeah, we're not gonna do that anymore. Yeah. All right.
Now, I really want to thank you, Jeremy, for setting aside the time. But perhaps maybe the schedules just can't make it, or people are busy shopping, man. Hey, it's Black Friday. What are you doing?
Yeah.
You don't deprive them from their discounts, man. All right, now let me just address the last one, Conrad. Conrad, when I say Friday, I'm talking about the portfolio building for cash flow. So you can find it. You can find it in our public Facebook group. All right, Conrad. It's not a session for the graduates. It was a session that I do every Friday night for publics. So you can find it on our public Facebook group. Yeah. All right, Jeremy.
All right.
Let's give everyone back their weekend over here.
Yes. I also want my weekend. Maybe
yes,
go for some more shopping.
Have a good break. And for our community members as well as our members, it is back to live trading night tomorrow, Monday. All right, now, so I have my live trading night with all of you on Monday. So I'll see all of you in the session tomorrow. Yeah. All right. And for this, we hope to be back next week with another set of stocks as well. All right, now, so thank you very much for joining us once again. Before we go, you can still help us by clicking on the share button if you have not done so. All right, and now that you have already seen the content, if you find that it's useful because we talk about Hong Kong stock today, all right, just click on the share button and leave a comment. A Hong Kong stock to look for. All right, perhaps that would be a good comment for the sharing over here. Okay.
Yes.
Thank you very much from my end over here. I enjoyed myself as a moderator. Jeremy, any last
I enjoy
thing
sharing the views as well. Yes. Yeah.
Okay. All right, everyone. Thank you very much, and we'll see all of you in our next session together over here. All right. Thank you very much, and we'll see you. Have a great weekend.
One more thing, Terence. I think Terence V. Do check your TikTok. You got a free like 15 minutes stock. What they call that, stock analysis from me for being my first video follower. Yeah. Wow. So do check and give me your stock.
Nice. I didn't know there was something special.
I didn't know about it. I was like, okay, so I better do something more for my first follower. So I told him that. Yeah,
Dan,
but I think he hasn't seen his TikTok.
Dan, I had the insider information, but I didn't. All right. Congratulations, Terence. All right, get in touch with Jeremy. Yeah.
Okay. All right.
Okay.
See you,
have
everybody.
A great weekend, everyone. Bye-bye.
Bye-bye.